Now, Metair has reported lower half-year earnings. The battery and vehicle component maker says the loss is mainly as a result of the significant increase in net interest costs and the impact of applying hyperinflation accounting on the earnings of its now former Turkish division, Mutlu. Group CEO Paul O'Flaherty joins us now with more details on that performance. Thank you so much for your time, Paul. Now, Metair firstly talks about a difficult trading environment, but you managed to grow the top line there. Just to start off with, what was the lift there?
So the lift was just general increases that we had with our customers. Our volumes were a bit depressed in South Africa, but we did have uplift in our battery businesses from a revenue perspective.
Well, going into those depressed volumes in South Africa, of course, one of the big headwinds that you did encounter in this period, of course, being from the rather slower demand from original equipment manufacturers. What's been at the heart of that challenge?
So there's a the manufacturers last year produced about 650,000 vehicles in South Africa. We're expecting this to be below 600,000. So obviously there's the demand both globally for the vehicle and locally. And then, as we reported, and as Toyota have said, they've had specific production issues, but they're expected to turn those around in the short term. So those depressed volumes really affects us quite badly because we've got very large factories that are built for this type of capacity. But they've managed it really well with just being efficient and cutting the costs.
So would you say that on that front, you may have seen the bulk of the pain or bottoming out of the pain in this financial year, and that there is an expectation of improvement from FY25?
Yeah, I think that's right. We've still seen these flatter volumes for the remainder of the year, but we kind of being really agile in managing this, but you're right. So we're really expecting an uptick next year, which is good for the country, actually.
Yeah. Metair also points to supply chain disruptions. How deep do those go?
Yeah, so that most of that relates to our port challenges, in getting parts and getting raw materials into South Africa, and the well-documented challenges with Transnet. What that means for us is sometimes we have to air freight, and that's very costly, or you have to have safety stock, so you build up your stock levels, therefore your debt grows. So that those are real logistical challenges that we have in trying to predict what's happening at the ports. And obviously Transnet has its plans in place, and we're hoping that over the medium term they can sort it out.
And has that affected your cost base materially, or has there been an offset of that by maybe the strategies that you have implemented there?
No, it affects our cost base. We don't pass on air freight costs to customers. We can't pass on our high interest costs because we're carrying extra stock. So it does affect us, and it's just something we need to manage. It's part of the environment.
All right. Well, let's go into Turkey there. Just talk to us about really what was the final deciding factor on the disposal of the Turkish division, Mutlu.
Yeah, it's prior to its disposal, it was Metair's single biggest investment. But I think over the last 5 years, when we tracked it, the Turkish lira has depreciated against the dollar by close to 500%. The inflation rate just in this 6 months is 75%. So it's really hyperinflationary. The interest rates, local interest, is between 50 and 55%. And so here you have a business which is actually a very well-run business, highly respected, reputable battery business. But operating in that environment where your costs, 50% of your costs are hard currency dollars, but only 20% of your sales are in dollars, you're just going to keep growing into debt. You're just producing less and less cash. And so it's come at the right time for us to sell it. Hyperinflation accounting just completely confuses the market about every single line item that you have to translate. So once we've sold it, it's much easier to predict what Metair is, and it takes a lot of debt off our balance sheet.
And you'd basically say that that eliminates the bulk of the risk in Metair's operations.
Definitely. I mean, the interest bill for the half year was 440 odd million. 350 million comes from Turkey. So we reduce the interest immediately by just selling Turkey.
All right. Well, talking about debt, let's go into your balance sheet. Of course, pressure on your working capital, also which translated into debt. I understand that there are also debt restructure moves underway. Talk us through that.
Yeah. So when I came in, obviously we were struggling with high debt levels. If you take us at June and you include our debt in Hesto, our total debt's around 5.5 billion. Once we sell Mutlu and get the proceeds, then we're dealing with debt of 3.7 billion that will sit on our balance sheet. If we take out our Romanian operation, then you've got approximately 3.5 billion of South African debt we need to manage. Okay. A lot of it is short term, and so once we have this package, we need to then go to the market and refinance it, get longer tenors, effectively try and get better interest rates, and get more favorable financing conditions for ourselves. But the trick here and the key was to sell Mutlu. The funders were very, very clear that in order for us to be able to go to market and refinance, we needed to de-risk Mutlu.
Paul, as you are now in the second half of the financial year, and maybe also just looking into, I guess, the next year or year and a half, what will your strategic priorities be looking like?
So obviously Metair, 75 years in existence, it's been a very strong auto component manufacturer for the automotive industry. We believe in the South African automotive industry. We'll be a big part of that industry. We're seeing new players come into our market, people like Stellantis. Obviously we need to try and win work there. So automotive component manufacturing is something we're proud of and something we understand what to do. But we also need diversification. You can't just put all your eggs in one basket. We're looking to sub-Saharan Africa. We do have a 25% interest in a battery manufacturer in East Africa. And through that relationship, we want to expand into sub-Saharan Africa and diversify. So both in mobility and energy and in aftermarket. There's a big aftermarket in sub-Saharan Africa, a lot of second-hand vehicles, etc. And so we really need to capitalize and find our feet in that market.
All right. Well, thank you so much for your time and giving us some more insight on the numbers that we saw coming out of Metair this morning. That was Paul O'Flaherty, CEO of Metair.